All right, back with Countdown right here on Bloomberg Quint. Now, before we get to Fab 4, a question each to all of our 3 experts who are present with us. Nipun, before we thank you, we're seeing increased traction in this food stroke supermart space. Almost everything seems to be doing well. Maybe the return of the consumer. Are you bullish here? Because if there's one reason to be bearish, it's the valuations. But maybe the numbers and the growth will justify them.
Well, clearly, Neeraj, the valuations here are relatively steep across the entire spectrum. Having said that, I think the kind of growth that you're seeing, the kind of store expansion that you're seeing, the kind of same-store sales that you're seeing, I think clearly is reflecting the kind of consumption spend that is happening. And it's not just across these kind of retail stores, but it's across the entire consumption spend story that is there, whether it is consumer durables, across all white goods, whether it is garments. I think you're seeing that up move happening, the rural spend potentially happening, and that's clearly getting reflected in higher valuations. I think as long as you have a few more quarters of this kind of growth that we've seen, this kind of valuations will potentially continue for the retail stores for some more time.
Okay, Nipun, we'll leave it at that. Many thanks for joining us and giving us that perspective. On the trade, you don't normally look at this one from a trading perspective. The volumes aren't exactly there, but still about 2 lakh shares traded on Avenue Supermarts in the session today. Ruchit, Jain, any thoughts here? Avenue Supermarts, would you trade it?
Yes, from a very short-term perspective, I think the stock has given a breakout in day before yesterday's trading session itself. If we see the recent past history, then in the month of October, the stock had made a high of around 1290. Prices consolidated in a range in the month of January. Again, the similar levels around 1290 was the high, and the stock was not able to cross the 1290 levels. Now, what has happened day before yesterday, we had seen that the earlier resistance of 1290 has been crossed. This indicates that now the demand is much more than what the supply is available. So I think this should push the prices higher. Usually, whenever a stock is trading at its all-time high level, we take out reciprocal retracement of the previous correction and come out with target projections. So 161.8% retracement of the recent corrective move is coming around 1420. So from a very short-term perspective, one should definitely go long on Avenue Supermarts, keeping a stop loss below 1260 or 1275 and expect target around 1420.
Okay. And I'm just looking at the broader end of the spectrum, a stock that's gained quite handsomely today. Sacchitanand, actually over the last few days, it's had some very large moves, and that's Growth Finance, up another 4% today, and it's been having these big moves for a while now. How does it look on the charts?
Well, definitely, we have already seen quite wild swings in this particular counter. Even right now, 500 has been a base for this particular counter, and it has, again reconfirmed that particular support, and it has started moving up. So I think that, the way it has been moving around, I think 540 would be a trading support for this particular counter, and we may see a further rally in this particular counter right up to say 610, 620. So I think the reward to risk is also sweet, and one can look at creating some long positions from a short-term perspective.
Interesting. Okay, well, constructive views on both these counters coming in. Let's see what else is made to Yash's list. He joins us right now, Yash Upadhyay, with the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Neeraj. So Mercantile Limited had gained over 6% today after the company announced that the Director General of Hydrocarbons has approved the field development plan submitted by its subsidiary, Mercantile Petroleum, for drilling over 23 million barrels of oil. Now, the trial productions will start from March of 2018, while the full-fledged production will start sometime later in this year. Scooters India is locked in an upper circuit of 5% today after the Board of Directors at its meeting held today had approved the proposal of selling their non-core land measuring almost 90 acres. We're also looking at Simbhaoli Sugars. This one has corrected sharply. The stock had fallen as much as 15% yesterday after CBI had filed a case against the company for an alleged fraud about 98 crore rupees. However, the company came out with a clarification stating that it is committed to pay all of its dues to Oriental Bank of Commerce in consultation with the other lenders as well. And finally, some big moves coming in from from Asahi India on the back of heavy volumes. The stock had gained as much as 10% today, its highest intraday move in calendar year 2018, with volumes significantly higher at over 21 times the 20-day average. Back to you guys.
Thanks a lot, Yash, for bringing those Fab 4 stocks of the day. And the markets too seem to have recovered a little bit from the day's low. 10,560 is where Nifty is trading right now. Bank Nifty still continues to be under pressure, and we've seen recovery obviously coming in for Sensex as well. But the PSU banking space continues to be under pressure. That's still trading with cuts of almost 3.5% as we speak. But let's also speak about the stocks which may come out of the F&O ban for tomorrow's trading session. And the reason being, I've not spotted anything new which can enter into the F&O ban for tomorrow's trade. So I just want to highlight one stock, JP Associates. And also remember, the stock has been pretty active in the last 2 sessions. We've seen good gains coming about. In fact, on a single day, we've seen gains of nearly 20%. And as we speak, the stock's actually trading in the green. It's off day's low. If you look at the overall open interest as a percentage of market-wide position limit as of yesterday was almost 87 to 88%. And for a stock to come out of the F&O ban, it has to breach the 80% mark. And if you could just pull up the futures of JP Associates March futures, that's showing you some bit of unwinding coming about. So the futures as well as a couple of the option strike have seen unwinding, and it looks like as of now that the stock may come out of the F&O ban for tomorrow, Neeraj.
Well, let's wait and watch. JP Associates had some 2 strong days before cooling off in line with the market. Avinash Gorakshakar, Head of Research at Joindre Capital, joins us right now on the show. Avinash, good afternoon. Thanks so much for joining in. What would you do with names like these, JP Associates? Not saying that it's not a company that cannot come out of the woods, but with a larger chunk of market also available at a lot more reasonable levels than what it used to. Would you advise people look at names like JP?
Neeraj, I think in this market, we have been advising our clients to actually avoid these kind of companies because the way the markets are, I think it takes a lot of comfort, to put in names like an Edelweiss or maybe an RBL Bank or something like a GNFC. I think quality finally plays a big role, and these kind of stocks could figure at best say 5% of your portfolio, not more than that. So considering the fact that the market is now finding a lot of resistance to go on the upside, we are definitely advising our clients to play a little safe and stick to quality, because if at all a correction does come in, I think these kind of stocks would obviously get a bigger kind of beating. So I think some investor who actually wants to take a bigger risk appetite and probably bet on these kind of names can definitely look at JP. I think some positive developments in terms of the Q3 numbers have been a good positive surprise, but sustainability of these numbers, Neeraj, is going to be very important. At least I would like to see at least a couple of more quarters before we see these profitability levels being sustained, and that would give a clear hint whether the turnaround is now clearly firmly in place.
Hey, a couple of stocks, Avinash, I want to ask you, as quality a group as they come from, Aditya Birla Fashion, Aditya Birla Capital, for all the quality that they have, the returns to investors have been next to negligible, right? AB Fashion, for the longest time I know now, it's stuck at this 150, 151 level. It may go up a little bit, but if you pull up the last 12-month chart, I don't think AB Fashion has given any material returns to investors. Let's just get that 12-month chart and just see if I'm wrong or right. Yeah, 12 months it's been flat. Aditya Birla Capital post-listing has not rewarded investors really.
Exactly.
What should people do? There are a lot of people I know who would have bought these stocks.
No, I think.
Have you looked at these companies? Sorry.
I think, Neeraj, to be honest, Aditya Birla Capital posted a slightly disappointing set of numbers for Q3. And I think if you look at their business, every business is growing quite, profitably. You look at their insurance vertical, their housing finance vertical, the mutual fund business. So I think probably, these are stocks which had actually taken off on the hype factor. I think initially when the stock got listed, I was surprised that this stock actually went about 215 to 20 odd levels. From there it has
240
corrected.
Or something. Yeah.
So I would believe that yes, it's going to take a little more time for these companies. But the positive part is both these companies are managed by a very solid, group. So obviously, you have to wait a little longer. Financial services, the way this business has been, structured, there could be a possibility. Maybe once the numbers start coming out better, each of the business could get listed. That was the bigger trigger when the stock got listed. So I think if at all somebody has a 2-year kind of plus view, then these are businesses which will still grow and can make money. But yes, in the near term, I think none of
in
the
2 years, you think AB Capital will make money? I mean, for investors who put money to work
I think
afresh?
so, because personally, we have been telling our investors also to put money in these kind of companies.
AB Capital?
Yeah. If you look at Reliance Capital actually took off just ahead of the Reliance Nippon listing, and now they have the general insurance listing. So I think value will emerge, but yes, in the near term, some amount of short-term pain will have to be undergone.
Okay. Well, where there is no pain today, and you're talking about quality, I was looking at the Nifty 500, Avinash, Astral Poly, Avenue Supermarts, Indian Hotels, Mahindra CIE. There seems to be a flight to quality for sure in the session today. What about Astral though? It is extremely expensive.
I think markets are clearly extremely buoyant and positive on the segment in which it operates. CPVC segment is going to be one of the bigger beneficiaries, and my sense is the company was a pioneer in this segment. Now there are many companies which have come in this segment. If you look at the the housing boom and the smart city kind of expectation that that would drive a lot of demand. So the headroom is definitely quite significant. But yes, if you talk about valuations, I think probably these valuations obviously factor in FY19 earnings also. So somewhere down the road, only on a correction, Neeraj, this stock could look attractive, because at this kind of price, I would not be getting a decent kind of risk reward, at least for the next, say, 12 to 18 months. I mean, to that extent, the price is already factored in the kind of earnings growth. So probably something like a Supreme Industries, probably which is a player in the PVC and the CPVC, and they have a host of other plastic products. That would be a better player to bet on. But yes, the overall plastic, PVC kind of players definitely look quite positive, because overall, despite the fact that agri is a big space, the non-agri space, especially the infrastructure segment, is going to give a big fillip to these guys, who have the capacity in place.
Wasn't there a note yesterday on Supreme? I think the target price of 1482, and talking about how, despite those multiples and at those valuations too, Supreme Industries would be trading at a 15% discount to Astral yesterday. The note that came out yesterday, I'm just missing out on the name of the brokerage, but I think the target price that they laid out was about 1482 for Supreme Industries, 1179. I think CLSA came out with the note on Supreme Industries in trade yesterday.
I don't know about Supreme Industries, but infra is locked in lower circuit as we speak. Supreme Infra is down nearly 20%. I was just checking this count. In fact, it's been weak since the morning session, so now down almost 20%. Are they related by any chance?
No, this is a different group.
Okay, no, I was just checking. The other one, Avinash, which has gone up is Shri Pushkar Chemical. I think that's the stock which has gone up on very high volumes on the cash side. If you could just pull up the stock of Shri Pushkar Chemical, it's seen gains of nearly 16 to 17% as we speak, 15% as we speak. Do you track this one?
I think they are into value-added specialty chemicals, and I think earlier this stock was in the limelight because obviously because their main competitor was China, and I think hopefully the kind of expansion they had targeted. My sense is, I think the kind of markets they service are basically markets where China has now effectively closed capacities due to environmental issues. So hopefully we could see a better kind of earnings curve for FY19 and FY20, and capacity to that extent also Navneet has already been built in. So clearly I'm not aware of any corporate development, but yes, this stock definitely could be a good acquisition on a kind of price correction.
Okay, that's the view on Shri Pushkar, which is trading with gains in today's session. But it's 3:15 that time of the show when we tell you what the dealing rooms are recommending in today's session. Yatin Moda joins us with his channel checks. Yatin, over to you.
Thanks for that, Navneet. If you look at the market setup, of course, it has been consolidating after the kind of up move that we have seen. And if you look at the stocks, dealers are talking about DLF, and that is one stock wherein dealers do indicate there is some selling at higher levels from the domestic fund. So dealers on the trading side expect some downside to continue as far as this real estate major is concerned. Apart from that, gas stocks, especially the city gas distributors, Mahanagar Gas and Indraprastha Gas, these are the two companies which are showing some traction and good accumulation in the future and option segment, and dealers currently recommending a BTST on both of these stocks. And watch out for Jubilant Life Sciences. That is one stock wherein a whole host of PMS funds are said to be buyers at lower levels.
Okay, thanks a lot, Yatin, for bringing all those checks. And markets are once again seeing some pressure in the last 15-20 minutes of trade. 10,548 is where it's trading. But there are a few stocks actually from the F&O side which have exhibited good bit of strength today. NCC, pull up that one. It's trading with gains of almost 3 to 3.5%. Ruchit, if I could come to you on the charts on NCC at levels of around 130, would you take any trade?
I think certainly the stock is looking positive. We have seen that last 1 week when the markets have shown a pullback move, this has been one of the outperformer within this space. And post a consolidation of about 5 to 6 trading sessions, today again the prices have indicated resumption of the uptrend. Secondly, even if you see on the volumes front in this up move, the volumes are significantly higher, which indicates that short to medium term the trend would continue to remain positive. From a very short term perspective, one has to take any trade, then one can create long at current levels, also keeping a stop loss below 125 and expect target somewhere in the range of 138 to 140 in next 1 or 2 trading sessions.
Okay, stocks like Axis, etc. have come off a bit. I must say Persistent has come off and come off meaningfully in the last few minutes of trade, so some bit of profit booking continues there too. Canfin Homes amongst others, which is down in the last few minutes of trade. Adani Transmission amongst stocks, which is down in the last few minutes of trade. So there are some stocks which are pulling back. Sacchitanand, Adani Transmission, any thoughts here?
Well, I really don't look at the stock, on a closing basis. But if you look at the overall structure, I think it is still stuck in a range somewhere close to 220, 180, and I think a clear direction will only emerge once the stock, breaches out of this particular range. So as of now, I think it is more of a consolidation here.
What Canfin Homes, Sacchitanand? Do you track that one?
Well, yes. If you look at the overall financial housing space, it has displayed good amount of strength. In fact, the way we are looking at Canfin Homes, we are expecting a price target somewhere close to 585, which could be seen in next couple of trading sessions. So if you look at the entire momentum play, I think 510 is the level below which this particular momentum could fizzle out. So far, I think the trend is good. One should hold on to their long positions with a price expectation of around 585.
Okay, that's the target price in Canfin Homes. Let's also get you some closing strategies going from our technical experts. Sacchitanand, I'll come back to you. Any BTST or STBT?
Well, HDFC Bank is something that we are liking right now. If you look at the overall structure, the bounce back has been very good from 1840 levels. This looks like a double bottom on the daily scale. And what we are expecting is that this particular move can extend right up to 1935. So I think, it's a very good opportunity where we are getting today. 1885 would be the stop loss for the trade and an expectation of a move towards 1935.
Okay, so that's a buy on HDFC Bank. Ruchit, what about you? What is your top closing strategy?
Navneet, we just spoke about NCC. I think this definitely comes out as a good BTST candidate also. As I said earlier, last 5-6 days of consolidation breakout has been seen today, that too with good volumes. So just from a 1 or 2 days perspective, I'm expecting target around 140, but from a BTST perspective, one can go long for targets around 136 and keep stop loss below 127.
Interesting. A clutch of names out there. Today I heard some positive calls on Bharti Airtel. That stock is looking like it will end in the green in a meaningful way, a couple of percentage points higher. So do watch out for that one. Amongst other stocks, what's come off and come off quite rapidly is Sun Pharma, which is down now 2.5% in trading, I think, at the lowest point of the day. Avinash, 2 days now gone by, you would have had chance to assess all that's happened. Sun Pharma, or actually more importantly Sun Pharma Advanced Research, what do you do here?
I think in both these companies, Neeraj, even if the Halol facility gets cleared, I think they had 2-3 minor observations, and the management has clearly mentioned that within a fortnight they would be getting back and clarifying these observations. Our sense is that FY19, it's very difficult to believe that this Halol facility would actually contribute meaningfully to the earnings. So I think the markets are definitely not very upbeat on the fact that FY19 is going to be a year. Probably FY19 could be a kind of a trigger year in terms of new product supplies from the Halol facility, and I think that would be a year to watch. But as of now, the stocks had actually risen. If you talk about Sun Pharma ahead of this Halol decision, I think there was a lot of preempt buying, and I think what came out was a minor disappointment. So I would believe that it's better to wait and watch over the next, say, few weeks and then take a call rather than jumping the gun. I think if one were to look at pharma companies, I think something like a Cadila or something like maybe even a Lupin, even at lower levels, could definitely be considered. So I would believe that yes, pharma is going to be a selective kind of stock picking approach. But overall, I think Sun Pharma, one could definitely wait a little further and then take a call.
Okay. Ruchit, I have a small question. If somebody's initiate short positions on PNB early morning today, no need that's possible, right? Not in a ban.
No, it's not.
Okay, so if somebody took short positions in PNB today, would you advise carrying home the shorts?
Yes, definitely. This stock within the PSU banking space has been one of the most underperformer. Not only while this corrective news post this negative news flows which we have seen, but even earlier we had not seen any kind of outperformance in the recent past from PNB. Recently, the stock has also been giving gap downs opening, and if you see a follow-up selling post gap down opening, so that is usually a negative sign, and I believe that this trend could continue going ahead. It's difficult to take any sort of target projections because the kind of fall that it has seen in last 7-8 trading sessions, you never know that we could see another 7-8-10% further on the lower side. So if one has taken short positions, then they should continue to ride this trend.
Well, there has been heavy shorting, at least that has been observed in today's session. The futures will tell you it's up nearly 30%. A lot of these option strikes have been active. But Avinash, that's about the trading perspective. You can expect more downside of 5 to 10%. But if somebody wants to look at a fresh investment for PNB, let's say for the next 2 to 3 years, would you dare to buy into it?
I think, PNB definitely would be a little tricky kind of scenario because we really don't know how deep the hole is, and RBI has yet not told the bank whether it provides for the entire 12,500 kind of hit. So I would believe that it's still premature to actually jump the gun and immediately buy it. I think Navneet, PNB Housing Finance could be a good opportunity. In this kind of fallout, if you find that PNB Housing actually cracks, that would be a good stock to actually bet on because they're the third largest housing finance player, a very good asset quality book. The CASA ratio as well as the overall scenario in the housing finance segment is growing. So I would definitely keep a watch on PNB Housing. Anything below 1200 could be a very good ideal entry point because the kind of QIP price which they made, they offloaded shares at around 1300 plus odd levels, to marquee institutional investors. So I would believe that this is one stock which one could definitely accumulate and where the risk is much lesser than PNB.
Okay, that's the view coming in on PNB. Avinash says one can look at PNB Housing and wait out at least for PNB for any sort of fresh investment. Just want to pull up V2 Retail. That counter is up another 7 to 8%. Remember in yesterday's trade as well, it was up nearly 12 to 13%. Do you track this one, Avinash?
Yeah, I think, sometime back Neeraj mentioned about the retail stocks. I think this is one of those retail stocks which actually has outlets in the Tier 2 and Tier 3 kind of cities. Clearly, the kind of growth numbers and the kind of, outlets which this company has been opening, especially in Tier 2, Tier 3 markets, makes it an ideal entry point for the lower middle class, customers. And that is what is driving, earnings and top line for this company. So, recently they said in the first half already they've opened about 6 to 7 new outlets. So my sense is I think, these kind of stocks could definitely give a much better kind of upside if one were to compare with something like an Avenue Supermart. But yes, definitely, in terms of the reach and in terms of the balance sheet, I think it's a long way to go. But yes, I think even in these stocks, I would personally like that the stock corrects so that you get a good entry point to enter. The kind of rise we have seen in these stocks has been humongously quite very sharp.
By the way, ADAG group stocks have come off quite rapidly today. Harcom, Reliance Naval, etc. are all down 6% apiece. Sacchitanand, any thoughts here? The ADAG pack?
Well, nothing as such. In fact, the entire pack has been, in a downtrend. So, we have always seen certain bouts of, pullbacks. But so far, there are no clear trend reversals. So, clearly avoid.
Ruchit, Oberoi Real Estate, big move upside yesterday. Today, a bit of a downtick.
See, the volumes in last 2 trading sessions are definitely quite good, but if you see from a fresh trading of a fresh investment perspective, the risk reward ratio won't be that favorable. The recent lows were around 460, so if you keep a stop loss around the recent lows, then it comes to around more than 15 to 18%. Comparatively in this space, Soba Limited looks much better in terms of risk reward ratio. The trend also has been positive. In the market fall in the mid cap space in the month of February, the stock has relatively outperformed, has shown a sideways movement rather than correcting price wise. I think one can look to buy a Soba Limited over here with a stop loss below, keeping a stop loss below 525 and expect target around 600 to 620 in short term.
Okay, that's a buy on Soba, but look at DMart. It's up another 5% after the gains that one has seen in the recent past for this company. Remember, Goldman Sachs had upgraded the target price, but what a move this counter has had. Well, it's time for us to head across to Neeraj to find out how exactly the closing is panning out. And Neeraj, we snapped the 2-day rally, but some bit of consolidation, no major cuts seen.
Yeah, but maybe the sell-on rally template, Navneet. Still firmly out there because the handover from the US markets was very strong. Somehow we didn't latch on to it. The Nifty Bank, the principal culprit, down about 1%. Actually, the mid caps and the small caps, just want to bring them up. And they too have corrected a bit. Midway through trade, the market breadth was about 1:1 on the BSE 500. I think it would have come off a little bit towards the close. We'll talk about that in a bit. Firstly, the top losers and gainers today. Let's start with the gainers. Bharti's had an interesting move, about 2.5% in the session. Dr. Reddy is not bad. Reliance has been holding out the last few days, and that's some solace, to be honest. Some traction for select IT names, actually all of them. Wipro, Infosys, TCS, a cluster here, but some gains out here for the IT names. What's lost out is banks. So Axis, SBI, ICICI Bank, Kotak Bank out of 1.25%, HDFC Twins, IndusInd Bank, it's banking all the way, and then some bit of losses to Sun Pharma and ONGC too, but largely it's got to do with banks in the session today, both privates as well as PSUs. What about the broader end of the spectrum?
Well, greater cuts, I would call it, seen for the broader market indices in today's session, but there were a couple of gainers. So let me start off with them. Sri Pushkar rallied nearly 15 to 16% in today's trade, and remember this counter went up on quite heavy volumes in the cash side, so 15% higher, so watch out for that tomorrow, whether there's any follow-on buying. Zuari Global was the other one, which was quite active today, 6% higher for that counter. However, it's closed off day's high. Well, the electrode makers HEG Graphite are back in action after rallying in the last 1 year. Both of them saw significant gains. HEG up almost 8%, and Graphite, where the circuit limit is nearly 5%, that was locked throughout the session in the upper circuit. And DMart, what a run this counter has had. The market cap has crossed 80,000 crore for this company. Avenue Supermarkets closing at day's high with gains of nearly 6%. Well, let me start off with the losers now. Supreme Infra was locked in lower circuit. That saw cuts of nearly 20%, and that also fell on very high volumes. The entire PSU banking space was reeling under pressure, so PNB as we know it fell another 10 to 11% in today's session. In fact, it is closing below the mark of 100. With PNB, you had other banks like IDBI Bank and Union Bank which came under pressure. In fact, the entire PSU banking space, that index also fell over 3% for the day. The stocks which went up yesterday saw a bit of profit booking. So stocks like Oberoi Realty, that was down about 5 to 6%, and the Anil Ambani Group stocks which rallied yesterday from the likes of Reliance Communication and even Reliance Naval, both of them came under pressure. In fact, Reliance Communication closing almost at day's low, and so was the case for Reliance Naval, down almost 6%, Neeraj.
Well, so this is the picture at close. I want to bring up 3 charts. One of them is, of course, the market breadth, then the turnover, and of course also show what some of the individual indices has done. This is the market breadth, and 1:2 in favor of the decline, so it did worsen a bit. In fact, the gap yawning towards the close, so at the worst point of the day in terms of the market breadth. The turnover should come up on your screen. The first few days of this series, it's been below average, and this too, actually NSE F&O may be slightly higher than yesterday, but the cash market volumes, probably just about par or subpar. And the contributors list will show you banks. I would presume it will be banks all the way on the red side. That's all financial. So HDFC, ICICI Bank, SBI, HDFC Bank, no surprise there. It peppered with red. On the green side, Reliance, Infosys, TCS is not featuring out there, but it's done a little bit of good work too. Bharti Airtel and HUL amongst others. So some bit of defensive nature to the gainer side, but banks getting cluttered on the losing list. And you don't quite know. I don't know what I mean, we haven't checked really what the rest of the world is doing. Maybe get the European indices up on the screen once and just show you what the rest of the world is up to before we get back to our guest for the final comments. And this is what Europe is doing. Actually flat, so no, not too much of a reaction from the rest of the world markets. So we've had our own issues in the session today. But clearly shows that the world might be an okay place. We're getting sold at some higher levels.
In fact, we saw the Asian markets coming off high. Shanghai turned into red, and today there was clear sign of shorting needed because we had a mild gap up opening. We touched the 50-day moving average, which was quite crucial, 10,615, but there were short positions that were taken at those higher levels. So once again, I think 10,500 will be a crucial mark to be watched.
Yeah, let's wait and watch what happens there. Let's get in final thoughts from our experts. Sacchitanand, before we thank you, what would your approach be to trade? Take it a day at a time because it's looking like fairly choppy. Rallies are being sold into, but closer to those 100 and the 200-day moving averages on the Nifty and the Nifty Bank. We're seeing buying as well.
Well, Neeraj, if you look at historical data and if you look at the series of March, historically we have seen that this particular series has been fantastic for the market. We have already seen a big drag on the market, and the pullback process is already reinstated. So we are expecting that this March series could be a phenomenal one, and that's why the stance should be clearly on the buying side. So whenever a decline or an opportunity comes down, the preference would be to go long in the market. On the levels front, we are expecting that the markets could revisit the levels close to 10,900, 10,960 kind of a zone on the higher side. On the lower side, 10,300 now looks like a very firm base. So we are expecting that the market should stay healthy in this particular expiry.
Ruchit, closing thoughts from you. Let's say there is a mild bit of a recovery which is seen tomorrow in the opening session. Would you go ahead and short?
It's clearly a consolidation phase. It's been 3 weeks now. Markets have traded in the range of 10,300 to 10,640. So probably now last 2-3 trading sessions post expiry, we have already moved to the higher end of that range. So I don't think that that would be much comfort in going long, at least at current levels. Yes, as far as creating shorts are concerned, from a very short term perspective, 10,500 to 10,640. We need to give. We need to have a breakout beyond this range to create any kind of directional bias. So in case if rather than going short on positive openings, I would wait for a breakdown below 10,500. If the markets break below 10,000, then definitely one should create then short positions.
Okay, so those were the closing thoughts from our technical experts. Thank you very much, Ruchit and Sacchitanand, for joining us today and taking us through your views in terms of the technical setup in the market. But Avinash, you spoke about GNFC. I think that's your top pick. Could you take us through the rationale? What sort of target price are you looking at?
No, in fact, we believe that even in these markets, Navneet, the stock trades at very attractive valuations. Our sense is that, the TDI business is going to be the value driver for the company. And most importantly, compared to a bottom line of around 550 crores, this year we could see a bottom line of close to 700 crores. And next year, hopefully a 4-figure mark. So in terms of earnings growth, this company has a very strong potential, and we are looking at a target price of close to about 600. So I think any weakness or even at the current levels, this stock actually trades at under 10 times FY19. So to that extent, a stock of this caliber could actually trade at a multiple of at least 12 to 13 times. So we have been recommending our clients to actually accumulate the stock, and our target price is around 600.
And what's the time horizon?
We normally have a 12 to 18 month horizon. So I think clearly over the next 1 to 1.5 years, hopefully when FY20 earnings start getting discounted, the bigger positive is the company could possibly, even look at a buyback post FY20, because that was one of the points covered in the recent management con call. They plan to actually repay the entire debt by FY20, and that would actually drive the ROE, which has actually been on the lower side up till now.
Okay, Avinash, thanks a lot for joining us today and taking us through that funda pick of the day, which is in GNFC. He has a target price of nearly 600. But it's time for us to slip into a short break and countdown. Don't go anywhere. We'll be back with more on the other side.
Life so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Back with countdown right here on Bloomberg Quint. Now, before we move ahead, let's get to the European markets. Remember, it's a flat start to the trade in the European indices. Johan Potts Johnson from the London studio with the complete lowdown on the equity action witnessed in the markets there. Johan, it's looking like a flat start. What are the internals looking like? How are the markets likely to shape up for the rest of the day?
Yeah, good morning from London. As investors await the first public comments from Jerome Powell, the new chairman of the Federal Reserve, most industry groups on the Stoxx 600, as you say, fairly flat today. We're just over 2 hours into European trading, and there's a rather damp feel to the equity markets today. About half the main markets trading lower today. The Swiss market off 0.3%. It's the worst performer at the moment. Stocks here in London slightly higher. The FTSE 100 trading up 0.2%, but no great movement across the markets. Now looking across the Atlantic Ocean, S&P 500 index futures signalling the first down day in 4 for US stocks. And the US 10-year Treasury yield higher today after falling to a 2-week low. Oil slipping today following a 3-day rally as investors await US inventory data. And in corporate news, America's Comcast has jumped into the fray for European TV company Sky. It's made a cash offer valuing the business at $31 billion, topping an offer from Rupert Murdoch's 21st Century Fox, owner of Star TV in India. Sky shares up some 20% this morning, making them the best performing major stock in Europe today. Back to you.
All right, Yuan, thanks a lot for bringing that action from the European markets. But moving back to Indian markets, markets have their focus on the 2019 general election, and that is according to UBS Gautam Chaucharia speaking to us earlier in the day. Chaucharia said that a result different from a BJP win in 2019 will have the markets running for cover. Listen in to a slice of that conversation.
If you talk to investors globally and in India, I think nearly all investors with a very high degree of probability assume and presume that Mr. Modi's government is going to come back and probably with the majority. So in a way, the markets are pricing in continuation of the current government and therefore the policy framework. And that's what's being reflected in the rich multiples and the confidence market has.
What have you guys been doing when it comes to these conversations? Because I'm sure there's a set of investors who believe that it's more or less a given, but would be wanting finer details about what could happen, what could be the math, what could the math be. There is an impact on the lower house and the upper house as well. And there's, as I said, a clutch of smaller elections that make an impact on the mood, if not the overall election outcome.
Absolutely. So again, we are not in a position to forecast what will happen. Even exit polls go wrong. Forget opinion polls and forget our views. So what we tell investors is to look at the pointers ahead over the next 1 year. And the pointers, as you said, are various state elections. Possibly even opinion polls. We might see opinion polls happening middle of the year, specifically if talks around the national elections being preponed to late this year starts happening. So if that happens, we'll also have opinion polls even for the full country sometime this year. And what we tell our clients and investors is that one of the key things to track from an analytical perspective is whether the fragmented opposition starts uniting, because behind the narrative of the popularity of Mr. Modi now and in 14 is also electoral arithmetic. If the opposition starts uniting, then that could also have a bearing on the outcome of elections.
Okay. I have one question from market's perspective, Gautam. And I think you make a valid point, and probably a no-brainer of sorts, that a change in expectations of what happens in the 2019 elections could have an impact on the market multiples as well. And investors will probably monitor all of those very, very closely. What is, I mean, we'll know what happens in 2019 only in 2019. And let's work for a moment with the assumption that elections happen on the date that they are supposed to happen. If indeed any of the state election results throw up a result which the market doesn't want to see, and there is a high probability of some of those things happening in the state of Rajasthan, for example. But if indeed that were to happen, would that cause an immediate derailment in the market multiples, and to what extent?
So our sense is, from a state election perspective, if I talk to investors, the investor feedback suggests that the markets and investors would worry only about the state election results later in the year. Unlikely they'll worry about, say Meghalaya, etc. And even unlikely they bother much about Karnataka, for example. They will bother about the three big elections end of 2018. So that's some time away. It's a few months away. But before that, if you start seeing opinion polls happening into the year, then obviously markets will start taking cues from that.
Gautam, good morning. Ira joining the conversation. My questions are slightly more basic and, for a market audience may seem a little too simplistic, but I'm going to ask them in any case. Tell me, 4 years into this government's term, is the market convinced that this government's economic policies are any different or substantially different from the previous government's policies? And if not, then why does it matter so much who comes back?
So there are two things on that. So policy broader trajectory towards reforms. You could argue it both ways, but what we have seen definitely in the last 4 years is definitely better execution in terms of the reforms actually getting done, like GST, FDI, other stuff, and including ease of doing business. So the broader policy direction has definitely picked up pace. And second is not just policy, but even in terms of execution on the ground, like infrastructure project taking up or focus on that, that's definitely picked up pace over the last 4 years. Now we can argue whether it's picked up enough versus what India needs or versus what markets itself were expecting in 14. But there's definitely a clear pickup happening over the last 4 years. What's also happened from the market's perspective, and this is specifically true for the global investors, India's macro has improved a lot. So inflation coming down, fiscal being in control, currency being stable, that's given a lot of comfort for global investors that India, unlike in 13 where it was one of the fragile 5, is now being talked about as one of the future growth hope stories. So that's definitely the big change which has happened over the last 3 to 4 years. Now you could argue how much of it is new policy, etc. But at the end of the day, those results are there to be seen.
On the first, Gautam, so what are the indicators that you all are focused on? I mean, you could look at something like stalled projects and say that there hasn't been a substantial change in that number. You could look at private investment for various reasons and say that the government has not managed to push that up despite, wanting to crowd it in by pushing forward public investment. So on the first, when you say that there is change on the ground, with the exception of GST, which is also having a fair amount of teething troubles, what indicators are you looking at?
So, for example, the pickup in road construction. So that's been one of the clear areas where we have seen a pickup by both in terms of NHAI, government, and including at the state level. So that big push has shown up in pickup in road construction. We are seeing early signs of pickup in housing activities with the government's focus on affordable housing. So again, it's not broad-based. The private capex is not just what the government does. So private capex has been a worry. And from our macro perspective, we do not expect a pickup in private capex in a hurry. So we have been underweight industrials infra. We still remain underweight. But from a broader government policy focus, there are positive areas where we have seen activity pick up over the last 3 to 4 years.
Right, moving on. Even as the liquor industry grapples with regulatory issues and a high tax burden, United Breweries is confident of keeping the growth going ahead. In a conversation with Neeraj Shah earlier today, the company's MD Shekhar Ramamurthy speaks of balancing volume and value in quest for growth. In fact, he insists that while someone in the industry will lose market share, it will not be United Breweries. Listen in.
Now, the reality is that in our country, alcoholic beverages are part of the state subject, and we are subject to increases or changes in excise duties, taxes, state by state practically every year. So yes, to that extent, the industry is, if I may say so, accustomed to it. And small, moderate increases do tend to get absorbed by the consumers, and we do see not much of a change in consumer behavior. However, in the last few months, we have seen a proposal for a very steep hike in duty in Maharashtra, because of which, as you mentioned, for about 2.5 months, we were not able to manufacture beer in Maharashtra because we were in dialogue with the government to have this duty hike corrected, which they did. There was a duty hike. Prices did go up by about 10%, but it was not as much as they had initially announced, which would have taken the prices up by almost 40%. Similarly, as we speak, there is a very steep excise duty hike proposal in Bengal. Again, for about 6 weeks now, we're in dialogue with the government of Bengal, and we are hopeful that this excise duty hike would be moderated. As of now, if it were to go through as it is, the price hike in beer in Bengal would be 40%, which is pretty steep. So we are hopeful, but that will get addressed. But as of now, it is still a little bit of a stalemate. So yes, duty hikes do go up. The recent Karnataka duty hike was on hard liquor, not on beer per se. And as it is from the beer industry perspective, we believe beer is extremely highly taxed. It's perhaps the highest tax category of alcoholic beverages. In most parts of the world, alcohol is taxed on alcohol content, whereas in India it tends to be on value or volume. So the per unit of alcohol duties and taxes on beer in India are far higher than on hard liquor. So in sum, yes, if the duty hikes are moderate, they tend to get absorbed by the market and the consumer. And 10 years is a long period of time. Yes, if you look back 10 years too, similar hikes have been there. But in the short run, yes, there would be impact, whilst long-term consumers get used to it.
Conversations with some of the smaller companies, we've had a few conversations with the companies which are not your size, but all of them are talking about, one, the growth being there, two, they're seeing growth by increasing of their market share too. I mean, the conversation always is that the market share for those companies is so low that there is a heightened possibility of their market shares moving up. Now, my question is, over the next 2.5, 3 years period, within the space that you operate in, what do you think will happen? Will giants like yourself, maybe Carlsberg, increase the dominance and increase the market share? Or do you think the smaller companies, because all of them are revving up with better personnel, increasing their logistics and distributions, will take off some of the market share? So the pie may grow by and large, but the share distribution will change a bit.
See, this is a competitive industry.
Yes,
and
it is. All are. Yes.
There are more and more new players coming in, some large, some small. And as a market leader, we genuinely respect all our competitors. And we recognize that they're here to be successful and to meet their objectives. Now, if you talk to any of us, whether you talk to United Breweries Limited or any of our peers in the business, they will all say to you that they're here to grow their business and grow their shares. Now, the question that arises is, will that share gain come at the expense of market leaders like us, or will the share gain come from the expense of other players in the business? Now, as UBL, we have demonstrated over a period of time that notwithstanding other players coming into the market and big multinationals coming into the market, we have constantly held / increased our shares. Over the last 12 months, our share has gone up by about 1.5–2%. So yes, there will be more competition, and there will be a different kind of competition, because you're seeing smaller players, niche players who are carving out for themselves a new segment in the industry, and it becomes our responsibility to respond to that.
Well, some other news. Oil prices have snapped a 3-day rally as investors await inventory data from the US IEA. IEA Executive Director Fatih Birol spoke exclusively to Bloomberg's Haslinda Amin and said that strong growth in supply from non-OPEC nations coupled with weak demand are some of the key risks to the prices.
Couple of risk factors, such as if the non-OPEC supply growth is stronger than what is assumed, if the demand is weaker than what people assume, or if the agreement that the OPEC and non-OPEC countries have wouldn't have the same level of compliance as we have seen in the past. There are many factors that the things may go in a different direction, but the surprise could be definitely a strong growth, stronger than expected growth from US shale.
And we heard from the Saudi Arabia's oil minister over the weekend saying that now he doesn't see a rebalancing until 2018. He doesn't know exactly when and how. How do you read that? Is there a rethink, you think, among OPEC members that a rebalancing could be much later?
Of course, there are different views on rebalancing, and the views of the people may well change throughout the time according to the changes in the market dynamics. So I think many of the observers started to understand the dynamics of the U.S. shale oil growth is strong, and this will have major implications for the global markets for 2018, and I believe well beyond that.
Earlier this year, you talked about a possible explosive growth in U.S. supply. Should OPEC still be concerned about U.S. supply?
it is, of course, up to the OPEC colleagues to evaluate what do they think of, as we call it, the explosive growth of shale oil growth from the United States. But first of all, we should well understand that what we have said, the explosive growth is happening. The growth is very strong, and once again, I would like to remind everybody that this growth is not limited to 2018. It may well go beyond 2018, and may have implications in terms of covering a big chunk of the global oil demand growth by itself.
Well, I think there is some news bits that have come out as well. I think Rajiv Kumar has put out a tweet, Financial Services Secretary Rajiv Kumar has put out the tweet saying that PSB MDs are directed to detect bank frauds and consequential willful default in time and refer the cases to CBI to examine all NPA accounts, rupees 50 crores for possible fraud, involve ED and DRI for PMLA, FMI, EXIM violations, if any. Well, this is interesting. I mean, we know that the news flow surrounding what will happen in the PSU banks will continue over the course of the next few days, weeks, months, possibly years as well. But in light of all that's happened very, very recently, this is an important one. But, you know, it's interesting. I mean, my only question is, and I think we'll get in Nikunj, we'll get in Ira to talk about all of this, is that, well, won't the PSB MDs usually be, you know, this be the nature of their very work as well? But anyways, this is the government has been talking about coming hard down on these issues, and it doesn't surprise me that this is one step that has been taken as well. Do we have Ira? I think we should be getting Ira moments from now. We're also getting Nikunj on the phone line as well, and he'll join us and talk about this. But this would be interesting. Ira is here with us. Ira, what do you make of this tweet?
Neeraj, sorry to butt into programming, but you know, this is fairly... so they're telling banks essentially that you have to look at every NPA account more than 50 crore from what I can see on the tweet and try and decide whether there's a fraud event associated with it, whether they are willful defaulters or not. Now, some of this would have happened, but if banks have to sit and comb through every account of more than 50 crores, so it's not, you know, in the current context, a large amount, that is going to take them a lot of doing. B, questions that the government should answer: are they expected to do a forensic audit on each of these accounts? If they are, then it's going to take a whole lot of time and effort and money for banks to go ahead and do these forensic audits and then try and determine whether, you know, these are to be referred to the CBI or the ED, etc. In effect, the simple point I'm making, and I'm sure Nikunj will be able to answer more of this, is that once again you're diverting the attention away from the banks, from general credit business. I'm not saying that correctives are not needed because of what has come to light in the case of PNB, but one has to be careful from going overboard in those correctives. In the morning as well, I think they had talked about EDs needing to take stock of IT systems, which is fair enough. They had given them 15 days, not a very long period of time. And now there's another tweet, and all of this communication is coming via tweets. The government is now saying that they have to do, suggesting that they have to do a forensic audit on every NPA account more than 50 crore. Neeraj, that's quite significant.
Ida, I have a question for you as well, but since you mentioned Nikunj will be able to answer more, we have him on the phone line, so let's get him in on this discussion too. Maybe you have a question for him, maybe Navneet does, but Nikunj, tell us more about this. I mean, we have this one tweet line which says over 50 crores to be examined for all the violations as well, EXIM, FEMA violations too. What else are you learning?
So basically what the banking secretary has tweeted is that all PSB MDs would now be directed to detect bank frauds and willful defaults on time and refer all these cases to CBI. So the CBI work is going to increase now, and all these MDs will have to examine NPA accounts worth 50 crore and for a possible fraud, and refer these to all investigating agencies in case they find there's any fraud and willful default here, that the promoter are not paying, they're paying back their loans, and for any possible violation of FEMA, PMLA, EXIM violations, which they'll have to inform investigating agencies like ED and DRI.
Ira, you have a question for Nikunj?
I'm not sure Nikunj has this information, but Nikunj, is it the bank's responsibility to now go through every single account, and are they required to conduct a forensic audit on each of these accounts more than 50 crore? They will eventually get referred to ED or CBI, but the initial round of work has to happen by the bankers, right?
Right. So banks will now have to identify all these accounts, all these NPA cases whose exposure is over 50 crore rupees here. So if you go by the tweets, banks themselves will have to conduct that forensic audit and identify all these cases and refer to investigating agencies in case of a fraud.
All right, Neeraj, I think, back to you. We'll probably try and speak to some bankers to try and assess how easy it will be to do this. 50 crores, as I said, is not a large amount. So a lot of accounts will have to be sifted through.
Yeah, and thanks, Ira. Thanks for actually coming in and giving us your perspective out here as well. The interesting bit will be to ask the bankers about whether moves like these would essentially help in curbing this mess, if at all, in the first place, or whether the logistical issues of doing so much outweighs the benefits, if any. I think it's best to put those questions to bankers, and we'll do that during the course of the day as well. Expect some more material on our website, bloombergquint.com, very, very shortly. But thanks so much for watching this leg of Countdown from Navneet and me and the team that put this show together. Thanks for watching, but stay tuned to Bloomberg Quint for more news and updates. What did you miss comes up on the other side.